Welcome back to the Digital Asset Report. Today we're talking about Bitcoin in the new era of trade wars. Is it a hedge, a reserve, or a strategic tool? Let's explore. We're living in a time where global tensions aren't just political, they're financial too. Trade wars between major economies are making a comeback, and they're hitting global markets hard right now. Tariffs are rising, money is getting harder to move, and governments are using tariffs as a tool or even a weapon in some cases. That's led investors, governments, and regular people to ask a tough but important question. Can Bitcoin help in times like these? It's worth exploring how Bitcoin could play a role in today's economic battles. When countries fight over trade, their currencies often suffer. To stay competitive, governments may intentionally lower the value of their money. This strategy, sometimes called a currency war, can shake people's trust in traditional money. And when that trust fades, people start looking for alternatives. Gold has historically been the go-to asset people use to de-risk, and we see this to be especially true with its recent price increase to $3,300. That's a new all-time high, by the way. But now Bitcoin is entering the conversation. Why? Because it's not controlled by any government. No central bank can print any more of it. Its supply is fixed, and that makes it attractive in a world where inflation is eating away at people's savings. People often call Bitcoin digital gold, and for good reason. It's scarce, like gold, and neutral. It's not tied to any country, which gives citizens around the world access to a very neutral asset. But Bitcoin also has a few more advantages that make it unique in today's world. It's borderless, easy to send, and operates 24/7. You don't need a bank or a vault, although BitGo has one. To transact with Bitcoin, all you need is a phone or a computer. That kind of flexibility is a big deal when financial systems are under pressure. Of course, Bitcoin is not perfect. Volatility is a known feature, and that makes some investors nervous. In times of financial uncertainty, more people are starting to see Bitcoin's volatility as the price to access for a global independent financial system. For governments, Bitcoin is both an opportunity and a challenge. Some countries that want to reduce their dependence on the US dollar or avoid international sanctions see Bitcoin as a way to keep money flowing without relying on traditional systems like SWIFT. Others are exploring crypto-based payment systems to trade with allies outside of the global financial mainstream. But in countries with strong local currencies or strict capital controls, Bitcoin can feel like a threat. If people use it to move money out of the country or protect themselves from inflation, governments can lose control of their monetary systems. That's why some regulators are cracking down, while others are quietly exploring how to use it to their own advantage. And large institutions are watching all of this unfold. For years, many stayed away from Bitcoin because it was simply too risky and too unproven. But that's changing. More firms than ever are now exploring Bitcoin as a hedge, not just for growth, but for protection when fiat currencies weaken or markets become unstable. Bo Hines, director of the President's Council of Advisors on Digital Assets, recently said in an interview with Anthony Pompliano that potential tariff revenue could ultimately trickle into Bitcoin, which could be a positive tailwind. Bitcoin doesn't always move with the stock market, and in fact, in some crises, we've seen it do the opposite. While equities marked down in early April of this year, Bitcoin barely moved. That makes it interesting as a way to diversify. With Bitcoin ETFs, optimal custody tools, and regulated exchanges available, it is getting easier for everyone to get involved in Bitcoin. Even if people are only dipping a toe in, the infrastructure is being built, and that's a growing signal that there's interest from the mainstream. Meanwhile, regular people are feeling the effects of trade wars in everyday life. In many countries right now, inflation is rising, wages are losing value, and strict rules make it hard to move or save money. In these situations, Bitcoin becomes more than just an investment, it is a lifeline. It can be a way to protect savings, send money to family, or bypass capital restrictions that make life too difficult. It's not without risks, and in some places it's not fully legal, but it's there and it's global, and it's increasingly easy to access through mobile apps and digital wallets. Bitcoin gives people a way to act when their local systems fail them, and that kind of freedom matters, especially when options are limited. Now, none of this means that Bitcoin is guaranteed to succeed as a safe haven. It still has to compete with gold, which has centuries of trust behind it. Central banks own gold, and financial institutions understand it. Bitcoin, by contrast, still needs to prove itself during global financial crises. but maybe this is its moment. Despite the challenges, Bitcoin's place in the world is becoming clearer. It's no longer just a speculative asset or a tech experiment. It's something more. For institutions, it's a hedge with potential upside. For governments, it's a tool and sometimes a challenge. For individuals, it can be a financial safety net when systems break down. As global trade continues to shift and the lines between politics and finance get blurrier, Bitcoin's unique position outside the system may be exactly what makes it valuable. Whether it becomes a core part of global finance or remains a powerful alternative, one thing is certain: Bitcoin is no longer on the sidelines. That's it for today. If you found this video helpful, give us a like and a follow, and head over to bitgo.com to learn more.